I get asked all the time, Luke, should I rebalance my portfolio? And the interesting thing about that is it kind of depends, right? Depends on who you are, where you are in your investing life cycle, right? So we'll be talking about when it makes sense to be rebalancing your portfolio. But as a young investor, I really don't think you want to be rebalancing, and I will explain why. Hey, I'm Luke Downey. Here is another edition of Lessons with Luke. I've been investing for a while, like 2 decades or something crazy like that. All I want to do is make you a better investor. So if you like this type of content, make sure to like and subscribe to our YouTube channel. So let's go ahead and get into rebalancing. And I will be straight up with you. I am not a big fan of rebalancing. Okay. Now, if you are a grandmother or if you're a grandfather, right? Or someone who is elderly and they depend on the income that they get from their stock portfolio, then it makes sense to do some rebalancing, right? Have a little mix of bonds, have a little mix of stocks, all that type of stuff. But if you are like me and you're in the working age or you're starting out and you're young, why in the world are you going to be rebalancing, right? The key to investing, right, for me, and we're talking about individual stocks here, is buy things that you think are great. You want to invest in great companies. It's almost like if you go out and you want to buy some real estate and you buy Fifth Avenue real estate, right, in New York City, when would you ever want to sell that? Probably never. And so if you are choosy with your stocks and you really are doing some due diligence, right? You guys know that I love fundamentals. I love to look for earnings growth, sales growth, great products, great management, all that stuff that a company has. And so when I am investing in a stock, it's because I think this thing is going to be a winner over the next 5, 10, 15 years. So rebalancing really isn't something that I'm interested in. Right. And the other part about rebalancing is you can miss out on a lot of gains by, trying to chase performance. You start to think about what's happened over the last year or two. Energy has been in this nasty downtrend. What if you would have sold at the end of the year, you got out of your energy stocks and now you see everything is rallying back? Or maybe you had some real estate stocks that were in your portfolio over the last couple of years, and then they started to rally back, but they were dead money for a while. And then finally they start to move. And that is the real risk that you have whenever you are doing rebalancing. So let me go ahead and share my screen, just show you what I am talking about. So again, I like to go to Yahoo Finance. I think it's a great, easy way to navigate the markets. And I've got XLE pulled up. That is the Energy Select Sector Spider Fund. Okay. So it's got a bunch of energy stocks. And you can see for 5 years, let's do a full screen on this bad boy. Let's move this out of the way. For 5 years, oh boy, we are not at 5 years. We are at 1 year. 1 year, this fund has been doing really well, right? Now, you spread that out to say 2 years or 5 years, this thing has not really been pretty. In fact, it's kind of been in a downtrend. So there is a whole host of stuff where people gave up on energy. They didn't see anything, right? They didn't see any value. And so what if you, based on performance, you said, I'm just going to rebalance. I'm going to get out of energy and I'm going to move to something else. Well, earlier this year, energy was one of the best performing sectors out there. So that is the real risk that you get with rebalancing. Now, again, I'm just doing this as an example. Real estate was like dead money for a while. This is, again, another 5-year chart here, but from 2017, call it, to 2019, it really didn't do much. And this is IYR, iShares US Real Estate ETF, using this as an example because a lot of people weren't interested in real estate. They were like, you know what? I can go to growth. I can go to this. I can go to that. And they might start chasing other performance, other types of funds. And then right after the pandemic, it has been literally a rocket. Okay. There's been no yield anywhere, right? Yields have basically gone to zero all over the globe. So people are now rushing into real estate. And there are some great real estate stocks. And so when it comes to rebalancing, I think you need to be very careful with that, because oftentimes what happens is people are rebalancing when, they look at their portfolio, they see what's down, they want to get out of it because they think it's not going to bounce again, and they go chase something that is moving up. And that is a recipe for just chewing yourself up. And, you just got to remember when you're building a portfolio, right? And I'm just talking about stocks, picking great stocks, all of that. Great companies are going to pull back from time to time. Great companies are going to rally from time to time. And the same thing is going to happen with bad companies, right? The key is just stay invested. And then if you have, say, 10, 15, 20 stocks, I like to have about 20, 30 stocks in a portfolio, then you just let them ride. All right. You let them do what they're going to do. All right. These are companies that you've done your fundamental analysis on. You've looked at it. 30 companies, mix it up, get a little bit of healthcare, get a little bit of tech, get a little bit of staples, get a little bit of real estate in there, get a little bit of industrials, all that type of stuff. If you do that, then you are going to be able to participate whenever you get these sector rotations, and you're not going to be as focused on trying to rebalance, because I have seen it time and time again. People go out, they rebalance, and they end up chasing something that they shouldn't have chased. They sell out of something that they shouldn't have sold out, because quite honestly, you don't really know what's coming next. You don't know what the next hot sector is going to be. There could be a pandemic, there could be this, there could be that. So rebalancing doesn't take, this whole picture of realizing that we don't know what's going to happen. So if you rebalance at the wrong time, you can really pay a big price for that. And so, not a big fan of rebalancing. If you're a professional trader, that's not what we're talking about. We're talking about investing. We're talking about long-term. As long as you buy great and you hold, right? And you do this over dozens of stocks, eventually you're probably going to get a couple of winners. And then hopefully you're going to get a couple of monster winners. And that is what you try to do in investing. But again, if you're rebalancing some of those winners, you're never going to get one of those big whoppers, because you're going to be selling at peak, when stuff goes up, buying when it goes down, and you're never going to get one of those all-star studded stocks. So be careful with rebalancing. If you're young, if you're working age, just buy great companies, hold them, diversify, stay diversified, but keep holding. That is how you win over the long run. I'll see you next time.